Okay, business owners, self-employed people, people getting a 1099 income that's not in the usual W-2 box, James. What do you have for them? I think a lot of these people, myself included, assume that a mortgage just isn't possible. It's going to be too much of a hassle.
Yeah, I mean, look, after the financial crisis, the pendulum obviously swung completely the other way. And I think the self-employed individual has become the most underserved market of the in the housing market because of Dodd-Frank and the borrower's ability to repay. And as a business owner myself, you have expenses, you have write-offs, so on your tax return, your net income, let's say on page one that carries over to page one of your 1040, your the number is low, but your gross receipts, let's say on your Schedule C, may be very high, and after those deductions, your net income is very low. So the good thing is over the last year or so, some of the bank statement type deals have come back. Investment type programs are out there as well, which are just based on the cash flow of the property. So they are coming back. They are at much higher interest rates, and I think as the private market catches up, those rates will come down, especially with defaults being low as
So,
they are.
so taking a step back, you said bank statement programs. For people who aren't
Yeah,
that initiated, you mean using your bank statements instead of a tax return
that's right.
to qualify for an income.
Exactly. So, using your monthly average deposits and a percentage of them as income as compared to just what's on your tax return. And obviously the advantage there is, for tax purposes, obviously you write off your expenses, you pay, much less of a tax liability. So yes, the interest rate might be 5.5, 6, 6.5, even 7%, depending on your FICO score. But if you look at that compared to what you would pay in tax and how much you're going to pay in extra interest, obviously there's a big advantage to paying, the higher rate and paying a little bit more interest on your mortgage on an annual basis compared to, let's say, having to file and show 100,000 of net income where you're going to pay at minimum, somewhere around 25,000 just in Social Security tax.
Right. So I'm going to put you on the spot a little bit here.
Okay.
I know you guys do a lot of self-employed business type loans. Just ballpark estimate in the last calendar year. How many of these types of loans did you say you've done here?
Oh, I would say dozens,
Dozens. Yeah.
dozens, absolutely.
Approaching 100. It seems
Approaching
like a good.
100,
Yeah.
absolutely.
Yeah.
It's gotten more and more relevant in the conversation of late, especially because we've been, a big proponent of it. So we've been marketing it quite a bit. So we're talking to more and more people and educating the self-employed community to say, look, you do have options. And when you're talking to self-employed people, they understand in running their own business that when you look at the numbers, it's not subprime lending. Again, we're cash flowing off of those bank statements. So the fact that you're paying a 6.5% interest rate and that mortgage payment may be $300 or $400 more a month, $5,000 more a year. But again, it's a lot less than that extra, 60 or 70,000 in income that you would have had to show and pay, taxes on that income just to
Yeah.
help you get a home.
The little bit of a higher interest rate is just part of the game, part of the deal of being self-employed.
Yes.
It's a trade-off. But I think a lot of people assume, or maybe they've been told no by somebody else, that because they're not a W-2 standard in the box borrower, they've been told no.
That's
and,
right.
And you guys seem to be able to get a little more creative here.
Yeah, and even in the conventional market, I don't want to miss on that point, is if you've been self-employed for at least 5 years, we can use a 1-year tax return to qualify for a conventional mortgage, so that maybe your last year was your best year, or going into the following year and you're going to file your taxes. Obviously, we're not going to tell you what to file as your income. You know better than us, but we can have those conversations to say, if you're looking to buy or you're looking for a $400,000 mortgage and it's 12,000, a property with 12,000 in taxes, you would need X amount of income to qualify for that type of
So you
mortgage.
can actually plan now for next year. So if
Yeah.
somebody's watching this and they're not going to be making a move, but they want to set themselves up to be mortgageable or to do a
That's right.
refinance a year or two down the road, it's a good idea to talk to you now.
Absolutely. Just like you would do your tax planning or estate planning or investment planning. Most people are sitting down with their financial advisor at the end of the year or the beginning of the year to talk about the future. I recommend that you give us a call and speak to one of our advisors if you're planning on buying a home. Let's do that mortgage planning now.
Yeah, actually, if you're self-employed business owner watching this now, put a recurring appointment in your calendar. call your mortgage planner once a year.
That's right.
This time of year, right after
Absolutely.
you call your accountant or right before.
Yeah, and because there is a lot more, product that is coming available for self-employed. This past September for me was, 21 years that I was in the business. In the late 90s, before the craze, there was many, self-employed programs out there, and that paper always performed. What really crushed the market was that they allowed a wage earner who's on a fixed paycheck every week to say or state that they made much more than they actually did. And the self-employed individual, obviously those programs were set for them, and that paper always historically always performed well because you are a business owner, you know your cash flow, you have good credit. So some of that product is coming back. It's just that the secondary market knows, the capitalist in people and our system, they know they can charge a very high premium in the interest rate right now because there isn't a lot of liquidity and there isn't a lot of takers there. So as things normalize, I do feel that some of those rates will come down. So it does make sense to check in, with your mortgage planner and your mortgage advisor and do mortgage planning at the beginning of the year.
Great. Thanks, James.